Hello traders, welcome to Liquidity Lens. In this video, we will be studying about the ICT Fair Value Gap. Fair Value Gap have two types depending upon the price delivery: a bullish Fair Value Gap and a bearish Fair Value Gap. In front of you, this is basically a bullish Fair Value Gap in which you can see we have one, two, and three examples. There can be different types of bullish Fair Value Gap depending upon the candlestick shapes. The first one is where first candle is a bullish candle, second candle is also a bullish candlestick which breaks the high of previous candlestick. Then third one is also a bullish candlesticks which breaks the high of second candlestick. In this series of three candlesticks, you can see a momentum of bullish candlesticks where each candle breaks the high of previous candlesticks. Here we have a strong bullish trend. So, how to identify a bullish fair value gap? A bullish fair value gap basically is the unretraced area. You can see the price retraced here with the wick, price retraced here with the wick. This is the overlapped area, and price retraced here with the wick, and then price retraced upside to the wick. This is a overlap area. So, in between this overlapped area, we have an unretraced area between the high of first candlestick. You have to remember that high of the first candlestick in bullish fair value gap and low of third candlestick. This is the third candlestick and this is second candlestick. So the area between the high of first candlestick and the low of third candlestick, which is marked as an unretraced area, you can see there is no retracement, there is no wick, and we can identify this as a gap. That's why it is marked as a bullish fair value gap. So this area is basically a bullish fair value gap. Then you can see here we also have one, two, and three candlesticks, and between the high of first candlestick and the low of third candlestick we have a gap which is marked as a bullish fair value gap. But what is the difference between the first bullish fair value gap and the second bullish fair value gap is that we have seen the momentum in this move. Every candlestick is breaking the high of previous candlestick, but we have seen the momentum ending here because the price did not break the high of previous candlestick and price has got rejection. We have seen a rejection candlestick at this point. That's why this is a bullish fair value gap, but this is not, I think, the most reliable bullish fair value gap. I will be most confident on this fair value gap but not on this because price has taken a rejection. Although if price comes into this fair value gap and breaks the higher previous candlestick, then we can uh, see for the longs or buy trades from here. Okay, this was the idea of bullish fair value gap. Next we have again one, two, and three candlesticks. No, between the high of first candlestick and the low of third candlestick, we have an unretraced area which will be marked as a bullish fair value gap. This is also a strong fair value gap. I will be confident in this fair value gap because price in this case is breaking the high of previous candlesticks and continuing its momentum. First price break the high of this bearish candle. It means the price is converting from bearish to bullish move. Then price break the high of previous bullish candlestick, so the momentum is strong. If price it is into this fair value gap, we can look for longs here. So these two fair value gaps are strong. This is not a strong fair value gap. We have no confidence in this fair value gap. Next, let us see the examples of this bullish fair value gap in the real market. How this fair value gaps look into the charts. At this point, you can see one, 2, and 3 candlesticks. High of the first candlestick and low of the third candlestick, we can mark this area as a bullish fair value gap, but price has not retraced in this area. Again, let's check the area where price should have retraced and we can look for the longs at that point. Let's see. Yes, we have this area 1. This is the candle 1, this is the candle 2, and this is the candle 3. 1, 2, and 3. You can see a clear a gap unretraced area between the high of first candlestick and the low of third candlestick, which acted as a support. The idea behind the fair value gap is that bullish fair value gap will act as a support. It will push the price to the upside. Whenever price reaches a fair value gap, price will get rejection from this area and it will push the price to the upside. Okay, so this was the bullish fair value gap. Here we can see another fair value gap, high of first candlestick and low of third candlestick. We have the fair value gap which has been failed. I think price has closes below it. Okay, this was also a fair value gap. In this video, I am teaching you how to identify the fair value gap, how to pick a fair value gap, which fair value gap will work. That is another topic, and we will discuss later in the coming video. Okay, this was a bullish fair value gap. Now we are going to study the bearish fair value gap, ICT bearish fair value gap. The idea behind the fair value gap is same, either it's bullish or bearish, only the price delivery gets changed. It is also a it is also a three candle shape, one, two, and three candle formation, where there is the unretraced area between the low of first candlestick. In bullish fair value gap, we were seeing the high of first candlestick. In bearish fair value gap, we will be seeing the low of first candlestick and the high of third candlestick. This is the unretraced area. This is the retracement. You can see the overlapping. This is the retracement. You can see the overlapping. But there is no retracement between this area from here to here. So this area will be marked as a bearish fair value gap. We can see a clear gap where no retracement has taken place. This is a bearish fair value gap and it's a strong fair value gap because price is in a momentum and price is breaking the low of previous candle. Here price broke the low, here price broke the low. But here we can see low of first candlestick, high of third candlestick. We can see a small gap which will be also be a FVG bearish fair value gap. But the momentum seems dropping because price broke the low of first candlestick, but the second candlestick low is protected and price has not broken it. That's why this seems to be a weak fair value gap. In this fair value gap, you can see between the low of first candlestick and the high of third candlestick, you can see a gap. This will be marked as a fair value gap and it's a strong fair value gap. Momentum seems to be continuing because price has broken the low of first candlestick here, second candlestick here, and I think the this look moves looks like this and momentum looks continuing. So this is the idea of bearish fair value gap. Let's mark it on the real time chart, how to identify it. The bearish fair value gaps act as a resistance. They resist the price and reject the price to the downside. Here you can see clearly that this was a fair value gap between the low of first candlestick and the high of third candlestick. Low of first, high of third. You can see price getting rejection again and again from this fair value gap, and you can see a massive dump from this area. So this was a bearish fair value gap. Next, let me mark a fair value gap which has acted. Okay, I mean which has worked. Oh yes, here is. You can see a bearish fair value gap here between the high of first candlestick, sorry, between the low of first candlestick and high of third candlestick, price reaching the fair value gap and getting rejection and a dump from this fair value gap. Okay, here you can again see the bearish fair value gap between the low of first candlestick, high of third candlestick. You can mark it as a bearish fair value gap, low of first, high of third, and a rejection and then a dump. So this is how you can use a fair value gap. If you wanna know about which fair value gap will work and which will not, how to pick a valid fair value gap, you can comment below. I will make a video on it. Okay, this video ends here. I wish you good luck for your trades. Take care. Goodbye.